It seems like head of global strategy over at JP Morgan's Marko Kolanovic is going to be wrong yet again. He expected a 7% rally to the S&P 500 this week due to portfolio rebalancing, and we just got some data that the markets do not like. And I want to talk about that as well as the title of this video, which is essentially the cost to borrow rate on AMC stock is going through the roof, almost at 60%. These are cost to borrow rates that we have not seen in a very long time. So I want to talk about and put into context exactly why this is happening and what we can expect, since yesterday was a 13% positive day. At the peak, AMC stock was up about 17%. So we got a lot to talk about here in this video. The work is cut out for us. Hit that like button and subscribe to the channel if you guys find value out of the video. But most importantly, congratulations to everyone that is here, that is helping and working towards bettering their own financial futures. You guys are doing this for whatever your reasoning is, hopefully for you and your family to live a much better life, and you are on the road to getting there. So congratulations to everybody, no matter if you're making money or losing money here today. Just keep buying the dip. Now, let's dive into all of this information. If you guys want access to all of my trades in real time, link down below in the pinned comment. The end of Q2, second half of the year, is usually a good one, so you guys definitely want to be a part of that. So the S&P currently almost down 1%, the Nasdaq down about 1.74%. So today was just a weird day overall. Starting off the day, the Nasdaq was red, the Dow was up almost 1%, while everything has flipped and is in the red right now. The Russell 2000 is up slightly on the day, but nothing that is noteworthy. Now, the markets have been slipping for a majority of the day. The markets did rally upon the open of the day, went from about 390 to 393 on the S&P, a decent move to the upside, and then we just sold it all off. We are at 384.86 as of right now. And what is causing the markets to fall is two things. It is this Richmond Fed survey fell to negative 19 in June. The June Richmond Federal Reserve Manufacturing Survey was negative 19 versus negative 7 was the consensus estimate, and a negative 9% prior read. So we were expecting this to get better. We were expecting more manufacturing, and that obviously will lead into GDP, and this is going to be something that causes fears about a recession because of how bad it was. Negative 19 versus a negative 7 consensus. We were actually expecting this to get better month over month, and it got substantially worse. Shipments was negative 29 versus a negative 14 prior. Capacity utilization was negative 9 versus negative 11 prior. So that is good. Utilizing capacity at a better rate, which positive, but these other things are just so negative that it does not offset. It says the volume of new orders, negative 38 from a negative 16 prior. So people are not manufacturing as much, and there's not as many new orders. This is directly going to cause fears about a recession, and that is what is happening today. Now, you do also have the GDP numbers, the final numbers for Q1 that comes out tomorrow. I don't expect it to be a huge market moving catalyst, just because we already know Q1 GDP was down 1.5%. It might go up or down one point, but it's not going to be something that is a huge deal. In my personal opinion, who knows? It could be. I didn't expect this Richmond survey to be such a big deal, but nonetheless, there is that. For tomorrow as well, you do have Fed Jerome Powell that speaks, and that could be important depending on what he says. If he throws us a curveball, if he says anything negative about the economy, could actually be seen as a positive thing. Maybe the Fed would not have to raise rates as aggressively. So that's something I definitely want to pay attention to. The core PCE prices quarter over quarter final for Q1 also comes out tomorrow at 7:30 in the morning. So keep all that in mind. That will be important. Something else that also did happen was the S&P Case-Shiller Index. So it says home prices increased slowed in April for the first time in months. S&P Case-Shiller says the key points: Prices rose 20.4% nationally in April compared with the same month ago period, according to the S&P CoreLogic Case-Shiller Index. In March, home prices grew 20.6%. The last slight deceleration was in November of last year. In a change from the last 5 months, when most of the 20 U.S. cities saw month-to-month price gains, only 9 cities saw prices rise faster in April than they had done in March. So kind of showing that, you know, home prices starting to take a slip, and the real estate sector is the largest sector of our economy by far. Everyone has to have somewhere to live. So there is that. Those two things are really helping to beat down the markets in a big way today, and hopefully that makes some sense. Fed Powell is going to be important tomorrow, as well as the GDP. People are going to pay attention to that. I don't know how much the GDP is actually going to affect things, but Fed Jerome Powell is going to be at 8 in the morning tomorrow. So by the time you guys wake up, you're probably going to get some headlines and some statements from Fed Jerome Powell, and that is going to move the markets around quite a bit. Now, on the note of AMC, you can see the cost to borrow max is now at 58.08%. That is very, very high. Cost to borrow average of 30.89%. Now, if we look at these shares that are available to lend out, this is the most interesting thing to me, because usually when the cost of borrow rates have been jumping like this, especially going up, you know, 20-25% overnight, basically what it did today, you have seen 0 shares available. 9 times out of 10 there's been 0 shares available, while right now you actually have about 35,000 shares that are available, and the cost of borrow rates are going up so much. That is telling me that these people that are wanting to lend out their stock, 30,000, 35,000 shares, they want a lot of interest. They want a high cost to borrow to actually do that, which does imply directly that we could see a more substantial move than not coming in the near term future. That's what tends to happen after a stock has a 13% positive day, and overall yesterday was just ultra bullish. We were up 17% at one point. AMC was really a standout from most stocks that we seen yesterday. So I think this is implying a decent move to the upside, and I think portfolio rebalancing is going to be a bullish thing for AMC stock once all is said and done. So there you have that. Cost of borrow average is at 30.89%, which is again another big jump day over day essentially. Cost of borrow minimum 4.72%. So that has went up a little bit, but the cost of borrow minimum was at like 3% yesterday, so nothing too crazy. Now, the dollar value of shares that are sold short is $1.55 billion. Dollars 7 days ago was $1.46 billion. I don't know if you guys remember, but we put out a video not too long ago where the dollar amount that was currently sold short was only $1.4 billion. So you are up quite substantially from that. And it does say the estimated short interest of free float has actually went down a little bit at 21.25%. This is due to the release date of the actual short interest, which did come out for June 15th at about 21.92%. I would argue the short interest is much higher than both of these numbers at the current moment. If you factor in the option activity and all of the market maker shorts, the short interest is really in the 30 to 40% range. We also made a video on that, so go ahead and watch that previous video. Now, the free float out on loan is 36.16%. Shares on loan 186.39 million. Days to cover 3.75. Cost to borrow says right here 15.9%, which is much higher than we seen a week ago at 13.99%. 100% share utilization, which it has been at 100% for months now. So there is that data, and I think that is very exciting. Now, for the day, you're actually seeing a lot of bullish option activity as well. 6 orders totaling $613.58 thousand. Positive order value of 64%. So another more so bullish day than a bearish day, and that is what tends to drive the overall price action with AMC stock. And yes, you are seeing some shorting today to a certain extent. You are seeing a lot of puts that are being bought that are deep in the money, and that is causing the market makers to go out and short even more stock, leading the stock to go down about 3.68% at the time of recording this video at $13.61 per share. Now, I think the most exciting thing for me personally when it comes to AMC stock is looking at AMC on the daily candlestick chart. we broke out above the 50-day moving average, right? Today, we were well above the 50-day moving average. Well, we came and actually tested the 50-day moving average, found support, bounced back up, and now we're waiting to see, or at least I'm waiting to see, if we can close above the 50-day moving average, which is going to be $13.53 per share. If we can find support, and you guys see this wick that went under the 50-day moving average, find support, hold up, then I think the next following days could be very, very bullish. That's what tends to happen when you break out of a resistance level. If it turns into a support level right away, that is a very bullish thing, and usually you will come up and retest the next moving average, which will be the 100-day moving average. That is at almost $16 per share, $15.99 to be more precise. So I think that is a very good sign. You want to watch that $13.50. What is it again? 53? Yep, $13.53 level to see if we can close there. That is the number that I would stick in your brain, $13.53 per share. We want to close above that. If we don't, then we got to really see what happens with the price action tomorrow. But I do think we will. That would be a move down of about 4.5% to close out the day. And we're looking stronger than not, considering what is happening with some other stocks here in the markets today. Now, if we look at the volume has been a little bit higher, but nothing out of the normal that we have not experienced in the past or even in the last couple of weeks, but volume has been decent. The MACD is extremely bullish. The RSI is at 53.52, so sitting close to that neutral level at about 50, so nothing too crazy there as well. But definitely you guys want to watch 13.52. That is the important level. As far as the option activity, you can see about 33,000 calls that are currently in the money for this week, 117,000 calls that are out of the money for this week. Still a lot of potential buying power just for this week alone, and you do have about 10,000 puts that are currently in the money. For July 15th though, the important expiration, you are seeing a decent amount of calls that went out of the money today that were previously in the money, and we currently have in the money calls at about 29,435,000 calls total that are out of the money currently, and about 92,000 puts that are currently in the money. So there is a lot of buying pressure that is just sitting on the sidelines. If the stock does go up, the market makers are going to have to get rid of a lot of those short positions. A lot of those short shares are going to have to be bought back. So keep that in mind. Max Pain currently sitting at $13 per share by the end of this week. We're pretty much where we are sitting at right now. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and I will see you in the next one.